Welcome. You're with Webfit News, and today we're diving into the brand new free trade agreement between New Zealand and India. We're going to break down what it means for the country, for our businesses, and, well, for you.
Look, this is way more than just another headline. It's a really big shift in how we do business with a global superpower. So what's actually in this deal that was wrapped up on December 21st, 2025? What does it mean for our jobs, our businesses, and just everyday life here in New Zealand? Let's get into it.
Right. Before we jump into the big wins and the pretty serious controversies, let's just make sure we're all on the same page about what we're even talking about and why this is all happening right now.
Okay, so what is a free trade agreement? The easiest way to think about it is like a special discount card between two countries. The whole point is to get rid of the hurdles, mostly these taxes called tariffs, that make it expensive to sell our stuff overseas. The goal? To make trade smoother and boost the whole economic relationship. Simple as that.
And why India? Well, the answer really comes down to one massive number, 1.4 billion. That's how many potential customers are in that market. India is not only the most populous country on Earth, it's also the fastest growing major economy. So this deal, it's basically giving our exporters a golden ticket to one of the most exciting markets on the entire planet.
So, who are the big winners here? Let's get into the practical side of things and look at which Kiwi businesses are really set to benefit from this agreement. Okay, this is the number that's got everyone talking. 95%. That's the share of what we currently sell to India that's about to get cheaper because of this deal. We're talking a potential boost to our economy of over $1.1 billion a year in the long run. That's a pretty big deal.
And here's a perfect example of what that looks like in the real world. Take our iconic kiwi fruit. Before this, our growers were hitting a massive tariff wall trying to sell into India. Now, we can send nearly 4 times our current volume completely tax-free. For our growers, that's an absolute game changer.
And it's not just kiwi fruit, not by a long shot. Our apple growers, our winemakers, who are facing tariffs of 150%, and our Monica honey producers are all getting major cuts. And for our sheep meat and wool farmers, those tariffs are gone. Poof, eliminated right from day one.
But, no trade deal is ever perfect, and this one definitely has its compromises. It's actually drawn some pretty sharp criticism. So to really understand the whole picture, we have to flip the coin and look at the other side of the ledger. And this gets to the heart of the debate, because the biggest point of contention, the thing you've probably heard about the most, is actually about what was left out of the deal.
And this chart says it all, really. Dairy is the absolute backbone of our export economy. It makes up nearly a third of everything we sell to the world. So to have a major trade deal that largely leaves it on the sidelines, yeah, for a lot of people, that's a very bitter pill to swallow.
The access we did get for dairy is, it's pretty limited. There are some small wins for things like infant formula, and there's a promise that we can come back to the table if India gives a better deal to another country. But for our main products, milk powder, cheese, butter, that door is still basically shut. And this quote from Foreign Minister Winston Peters really captures the core of that frustration. The argument is that for all the gains we just talked about, New Zealand gave up a lot in other areas for what some see is not enough in return, especially with our biggest export sector left out in the cold.
And the concerns don't just stop at dairy. You see, modern trade deals aren't just about goods anymore. They're also about services and people. This deal creates new visa pathways for skilled workers from India, and critics are worried that could put pressure on our local job market and maybe even tie the hands of future governments when it comes to setting immigration policy.
Okay, so we've talked about business and politics, but let's bring this all back home. How might this deal actually affect daily life and opportunities for everyday New Zealanders down the track?
This table really gives you the before and after snapshot. We're going from a situation with high taxes and tricky market access to a new world where it's cheaper to sell our goods and there are new structured pathways for skilled workers. The big hope is that more exports will mean more jobs and a stronger economy right here. And for you as a consumer, more trade could eventually mean more choice on the shelves.
So let's look a bit closer at that new visa pathway, because it's important to get the details right. This is not some broad open-door policy. It's a very limited and targeted system. It's only for specific, highly skilled jobs that we're short on here. Think doctors, nurses, engineers. There's a cap on the numbers, and the visas only last for 3 years. They're not renewable.
So, with all these wins on one side and all these concerns on the other, where do we go from here? Because this agreement, it's really not the final word. Its true impact is something we're only going to see over the next few years.
Now here's a really crucial detail that's built right into the agreement, a review clause. Both New Zealand and India have agreed to come back to the table just 1 year after the deal kicks in. This tells us they see it as a foundation, something to build on, not a finished product. So things like dairy could absolutely be back on the table down the line.
And this timeline shows that the story is really just getting started. The deal gets signed next year, it gets implemented, but the real test is mid-2027, when that first review happens. That's when we'll start to get a real sense of whether this is the start of something much bigger, or if those compromises were just too great.
Ultimately, that's the big question at the heart of this whole debate, isn't it? Is this a truly historic opportunity to tap into a massive, growing market? Or is it a risky compromise that gives too much away? The deal presents clear opportunities, but it also comes with real risks, leaving all of us to weigh up the balance.
So, what do you think? The debate is only just beginning. To help you form your own view, we have a much more in-depth analysis waiting for you over on Webfit.